Hi everyone and welcome to our market analysis videos here at Forex. My name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you daily videos on market commentary and educational content. Now for today's video I'm going to be analysing the GBPUSD market, but for the rest of 2021. Now to do this I'm going to run through the fundamentals first to see what the main themes are for the year. Then I'm going to move on to the chart where I'm going to identify key levels to watch out for and to aim for in the second half of 2021. Okay, so have a look at the fundamentals that are really driving this pair for the rest of 2021. Now, I think first of all we need to look at the response to the pandemic. Now in 2020, as we know, the coronavirus pandemic caused a huge drop in the price of the cable, especially during the first quarter. Now cable actually dropped to its lowest levels since the financial crisis in 2009. And this was actually due to the slowdown in economic activity in the UK. However, in the second and third quarter of 2020, the price of cable began to rise amid a bullish correction and easing of lockdown restrictions in Great Britain. Roll the clock forward to where we are now, and out of the two countries, the UK seemed to have done a better job really at dealing with the pandemic, in my opinion. Sports stadiums here are full, masks are no longer mandatory, and it's been a real turn around in fortunes. Whether people agree with the easing of lockdown restrictions or not, it has meant economic activity in the UK has picked up slightly quicker than what we see in the US. Now, do we have Brexit to thank for this? And well, at the start of 2021, cable actually moved higher when the UK finally took leave of the European Union with a trade agreement that was in January, and it became an independent nation once again. Now this saw the cable pair reach the highest levels since May 2018, so a real turnaround from before. And it also meant the UK were able to get the vaccine quicker than countries in the EU. Now let's have a look at what the respective banks are doing. Well, I think in both situations they've adopted dovish approaches. The quantitative easing in the UK by the Bank of England has now reached £895 billion in total. But I think the US took the expansive policy to a greater extreme, even relative to their population difference. Now the US have a decision now on whether to scale back on their $120 billion a month stimulus package, and we find out critical information tomorrow at the FOMC press conference, and that's at 7:30 PM GMT. If Jerome Powell stays slightly more dovish, then we could see the recent dollar run pause ever so slightly. However, if they announce tapering this year, then this pair may consolidate or even fall for the rest of 2021. And when I go and do my analysis on the chart, although I'm going to be talking about the technical levels, I'm going to be really focusing on what stance Jerome Powell and the Federal Reserve are going to take to asset tapering. I think it's really going to make a difference to where this pair goes in the long run. And off the back of the fundamentals, as I say, I'm listening out on what Jerome Powell says, but I am leaning towards buying this pair. And that's only because I think the pound is situated at a value level at the moment, given the response they've had to the pandemic. But let's take a look at the chart to see some key levels that we can look out for the rest of this year. Okay, so have a look at the chart and let's have a look at some key levels, and I'm on the weekly time frame first of all, and let's see where we are at. So as you can see, we're just at this level where we hung on to the 50-week moving average once, twice, but now we're looking to break below. Depending on how this week closes out, and it's just really... Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. It seems like a coincidence that tomorrow we have this Federal Reserve decision as well. If we do close below this 50 moving average, then I can see a leg lower in this pair for now. Where could it go? I'm seeing this demand zone situated down here, which would be a nice discounted buying opportunity. That's at around 1.3. Now this would mean that the Federal Reserve has been hawkish in nature, and therefore the dollar starts to pick up some strength again, like it has been over the last couple of weeks. We see a fall into this demand zone that we have here, where we had this order block entry and we had that run up and break of structure. We also have another one from this bearish candle in here. So you could see a fall into either of these zones. Where the market goes from there, well, if I'm being totally honest, tomorrow's decision is really important. Are we going to get any change of language in response to the tapering threats? Well, I think Jerome Powell is going to stay slightly dovish, probably against what other people think, but are the markets still going to take it as hawkish, which is a different matter. I think he's always been dovish in what he says. I think he's going to say we're so far away still from interest rate hiking. He always says that we're still far away from achieving their goals of full employment. And the markets could take this as a dovish spin, and we could see a reversal in this candle and a close above. So really important that we listen out tomorrow, but I'm going to play it out from both situations. If we do get a close above this 50 moving average, if I zoom out and have a look where I think the market could go for the rest of 2021, I'd be targeting the highs of around... Oh, wrong. I'll take profit level at around these 2018 highs. And that's at around 1.34-ish. Now, this would be, because what you can see is you can see the moving averages start to tick up as well, despite the RSI looking like it's moving to the downside. You can see that we're starting to form a base in this pair from the lows of 2020. And you could see that we're just having this pullback now. And as I say, I do fancy another leg lower because we look like we're really hanging on. And if I move on to the daily chart, this is... represented by what you can see at the moment. We're really hanging on to these swing lows that we have here. A break below there, and we can see opening up around this level, I said around 1.3. You also notice that on this moving average play, we can see that this 50 moving average crossing over and below the 100-day moving average and the 200-day moving average, and we've now had a solid close below this yellow line, which is the 200-day moving average, which suggests to me that this market wants to go lower. Now, I only really see it falling to something around 1.3. After that, we can start to look for some buying opportunities. Alternatively, let's see how these lows hold here, these support levels. I'm going to mark these out and leave them there, because if they do tend to hold and we get a reverse round and we get the Jerome Powell slightly more dovish tone than we expect, then this market could recover straight away, and we could see a situation where we're consolidating and we're ranging between these levels, and we get another bounce, and then it's a case of, well, we then need to wait for the next jobs report, which is coming out next month. But overall, we do need to be patient with this pair, and I think before we jump into any sort of trades, let's listen out tomorrow to hear what Jerome Powell has to say. It's going to really make an impact on where this market is going for the whole of 2021. And I think it's going to be really volatile in the markets as well. So that's it really for GBPUSD. I'm aiming for 1.43 as a 2021 target. Depending on what Jerome Powell says tomorrow, if he decides to be more hawkish, then we could see a fall down into the 200 moving average, and we could have our take profits for 2021 down at around 1.32. Decides to be more dovish and tapering isn't still next year, then we could see a move up towards that 1.44 mark. So, as I say, very important to listen out for tomorrow and for the future jobs reports as well, and the future FOMC press conferences. That's what's going to drive this pair. And yeah, just trade safe and be patient in the markets. Make sure you've liked and subscribed to our channel, guys, and make sure you've got your notifications turned on as well. Always drop your comments in on the comments section. We always reply to them here at ZenFinex as well. We'd like to hear your opinions on what you think of the price action that we're seeing at the moment, a bit of chop and churn. Other than that, I hope everyone has a great trading day and a great trading week, and I'll catch you all for the next video.